Hi, cryptomaniacs, and nice to have you on board again today. Updating the Bitcoin scenario because, of course, we still. I stand on this. Yesterday's H1 signals were still not to trade because of the upcoming G20, which could very well impact the pricing on those time frames. But now we might have a daily signal on the way, which is a very different thing because as the G20 could have impact out of the H1 timeframe signals, it will hardly get to impact the daily chart. And if we do manage to confirm the signal by a candle close tonight on the actual candle we have right there, which is signaled by sine wave as a bullish confirmation coming out of a confirmation of momentum. So we should be on a taking profit pattern confirmed by momentum. And now we have price confirmation. So if we do close like that tonight, the market will confirm that as a bottom. Okay. So I think that in that case, we will have a range situation. Okay. Because we plotted a first signal right here, got up there, broke it down, which means that there is resistance in here. Okay. There is clear resistance in here. And now we have validated a bottom. If we make the candle close like that tonight, which means that we will range this price area. And this is totally different scenario from what I told you yesterday. Yesterday's scenario was H1 timeframe scenario. Now I give you a daily chart scenario. Totally different things. So don't say and don't think that Phil has changed his mind. No, I haven't. Yesterday's trade was still a stupid idea. I shouldn't have taken that trade, even though it is a gain today. The risks were too high. It could very well be 10 to 20% down today, and it would have been a huge loss. And that's not how you trade. You don't trade to get potential gain and risking huge losses. Whenever you have that, this is gambling, no trading. Trading is risking less and potentially gaining lots. This is how trading is about. So yesterday was totally the opposite. The risk was potentially dropping more 10%, 10 more percent to gain what? A 5% retracement potential counter trendy trade? No, way too risky to trade that. Now we have something more reliable to trade on because we have that very nice lower wick candle with a big lower shadow. We even closed nearly at the high, and now today we're confirming that signal by breaking yesterday's high. And if we hold on to make a close above that price, then the signal is very well going to be validated and means that we found a bottom right here. And we will have a new technical framework to work with, but a totally different one from yesterday's signal. Yesterday's signal, now that it is potentially confirmed by the daily candle, and we need to have that candle closing like that today with a blue triangle to trade the scenario I give you. If we don't have this, don't trade. Simple as that. It's really a must-have technical information. If we have that daily scenario, that daily signal confirmed, then we can trade a range out of this resistance, this support, and breaking the two boundaries will give us the new trend. If we break that up, maybe a bullish trend could reactivate. To me, 20% chances it occurs, but 80% chances we could have a bearish reactivation on the higher part of the range, putting us downward to the lower part, breaking it down in order to break down the $6,000 after that. But for now, range price action is what I favor. It's my favorite scenario. Remember, that's the one I've been searching to build since we were right there, because that's what the signals told me to do. When we had the taking profit pattern, I knew we would build a range. The only variable I didn't know about was what that range will look like. That's the only thing I didn't know. Now I have reliable information to forecast the potential range boundaries, and that's what I will take profit out of. So remember, what kind of pattern am I going to be triggering right now? I'll trigger the range trading pattern because that's the only thing you can do in a range trading risk reward ratios. So now switching back to the H1 time frame and simply putting the signals where we want it. So I put Simply, once again, still the same retracement levels. So these are 23.6 retracement, 14.6. There you have 38.2. There you have 61.8. There you got 76.4 and 85.4 percent retracement out of this top to that bottom. This top is the one we sold. Remember, we got the bullish reactivation right here, the one I attempted to trade and in which I got wrong-footed. That's the price that extended the range to the lower boundaries. Okay, it's really simple as that. That was the range I speculated on. The market decided it otherwise and put that range to lower levels. But the range is probably going to build up here. Anyhow, it's just that I made a mistake thinking the range will build up on higher pricings. We simply lowered the pricing and will arrange the two boundaries. So resistance, support. Really simple as that. And I'm going to trade this, the risk reward ratio. I don't care about the price right here. It's really the exact same pattern as we triggered before. Now I take everything that is between the 38.2 retracement, that line, and the 61.8. And now you may know what I'm going to be putting in this. This is the down zone. You don't want to trade anything in there. You simply want the price to cross that area. So the only reliable trading range scenario could take out of this, so trying to take profit out of the range, is to try to get an entry price in the blue area in a pullback in order to get the B point of a potential ABC retracement structure and taking it out of the DOM zone. So you can take, if you have any bearish signal in here, you take partial profits, and you have to take entire profit whenever you reach out to the blue to the red area. And if you do have bearish signals, you can consider making a reversal trade, shorting there, securing the trade there, and stop trading the range. If you do have this, you will have take a gain on the upper side, taking a gain on the downside, and simply wait. I'm a seller. I'm still bearish on the market on the daily basis. So of course I take low leverage here, great leverage here, take partial profit, and keep half of the position running on to wait for the bearish breakout. I will then wait for the range to build up, and whenever I have the bearish breakout of that range, I'll be able to reinforce my positions. So these are the only trades I consider for now. I have been speculating on the potential forecast of a triangle. I really don't know what the market will choose. All I know is that I don't care what happens after I took two trades in that range. Upward, downward, and I'm out. And then I wait to have the bearish breakout. Really simple as that. The range can take too many variant forms to trade and to forecast this. So the only rational action you can make in a range, waiting to have good prices, whether it's buying or selling. Just be patient, and if the market don't gives you those prices, just don't trade. If you enter right now, you are totally in the middle of the down zone and you really have no clues about what the market will do. Going all the way through it, reaching out to the selling area in which I will sell, or going downward, reaching to interesting pricing to buy. That's the only two options, but that's really 50-50. That's nothing you want to trade out of. You want gambling? Totally perfect price to gamble. Right here, totally in the middle. You can buy to target this, sell to target this, but the market really has 50-50% chances right now. Now you know everything. I'm going to leave you guys on that. So this is my new technical forecast. Of course, this has to be confirmed by tonight's close. If tonight's candle close with a invalidation of the current triangle we have on daily chart, then the signal is not tradable. That's the only thing you need to know. We need to hold on to bullish prices today, have a retracement tomorrow, buy it, and targeting the higher pricing. And of course, the stop loss has to be put it below the previous support we built right here. But that support is not, it's a really good support. We got exit signal on sine wave, exit signal on momentum. That's the heaviest signal you could get with the indicators. Double exit is really a reliable one. If only that G20 thing wasn't in here, I will obviously be a buyer of that market. Goodbye, guys, and see you tomorrow.